Hey everyone, Rivian stock investors got some great news today that sent Rivian stock price up nearly 10% as of this recording on December 14th, 9:30 a.m. So in this video, I'm going to discuss what that great news is for Rivian stock investors and the deeper impact of the news. It's not just the first order impact, but there's a second order impact of this announcement that I think is also great news for Rivian stock investors. So let's jump right in and dig into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the big news that Rivian got is that AT&T and Rivian made a deal where AT&T expects to start adding Rivian electric commercial vans, R1T pickup trucks, and R1S sports utility vehicles in its fleet in early 2024, they said in a joint statement. The companies did not disclose the number of vehicles AT&T will buy or the financial terms of the deal. If you want to be picky, it would have been nice if they made an announcement such as they're going to purchase 2,000 vehicles in 2024 at a average selling price of whatever it might be. Still, this is really good news for Rivian stock investors, notably that they just ended that exclusivity agreement with Amazon. God, that was hard to say. And now they've already made a deal with a partner, right? So let's take a look at that. So just recently in its third quarter earnings statement, Rivian announced that it will enable other companies to purchase its custom designed Rivian commercial van, right? Amazon and Rivian remain focused on bringing 100 Rivian electric delivery vehicles, and Amazon already has purchased over 10,000 electric delivery vehicles in its fleet. Remember a few quarters ago, Rivian was disappointed at the slower pace that Amazon was ordering these vehicles, right? They agreed for 100,000, but Rivian was expecting Amazon to order that 100,000 at a quicker rate. So far, they've only ordered 10,000. And so I guess that's where the discussions began between Rivian and Amazon. And remember, Amazon is a significant shareholder of Rivian shares. It said, let's get into an agreement here. If you're not going to be buying so many of our electric delivery vans, which is leaving us room to make more, right? You're not buying everything we can make. So we can make more and sell more. So why should we have this exclusive relationship if you're not going to be buying everything that we can make, right? Initially, the benefit of having an exclusive relationship is that Amazon could get access to every single electric delivery van that Rivian can make. But if you're not going to be buying everything Rivian can make, and there's more than enough to go around, then do you really need that exclusive relationship? Or would it be more beneficial if you allow Rivian to make partnerships with other businesses, sell more of its electric delivery vans, and as an investor, Amazon can benefit from that as well because they're an investor in the company. And so this announcement came shortly after the fact that Rivian made these vehicles available. So this is the second part of the good news. The first part is that, of course, they're going to be selling more electric delivery vans and making their business grow in terms of economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. you can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, the second order effect, the good news here, is that soon after they made this announcement, there was a deal made. And that shows progress, that shows demand in the market for Rivian's vehicles, that shows a capability to pivot and to make deals and to increase business activity. And Rivian has been an outlier here in 2023 in raising its production targets. They started the year at 50,000, then they increased to 52,000, then they increased to 54,000 unit production for 2023, while many others have decreased their production targets. So Rivian has really outperformed here in 2023, and this item here is another step forward for Rivian, which is having a relatively strong year in an otherwise difficult, challenging year for electric vehicle companies. Still, there's a long way to go for Rivian, right? All that said, all of that good news we talked about, still, we have to highlight that Rivian operating profit margin negative 107.7% in the most recent quarter. Now, I mentioned earlier that it is growing nicely. It is making improvements and growing production, which is helping it reach economies in scale. But there's still a long way to go before that progress leads to profitability on the bottom line. But when you're dealing with a company like this, a startup, one that is new, of course it's going to be generating losses on the bottom line. That's understandable. But what I look to see with companies like this is progress towards profitability. Are you hitting those milestones? Are you setting goals that are reasonable? And then are you achieving those goals and updating investors and saying, look, we told you we were going to do this many units in 2023. We actually did a little bit more than that. We told you we were going to hit gross profit margin positive in 2024. We actually did it a little better than that. And so if they keep making that kind of progress, then investors will continue to be willing to be patient with them and to continue to provide them capital that they will need, because they're losing a lot of money. So they need money from investors so that they can continue growing the business until it can get to self-sustaining levels, until it can get to self-funding levels. So that's why these little milestones are an even bigger deal for companies like Rivian that are making progress towards profitability and are still losing a lot of money on the bottom line. This would be a much bigger deal for Rivian than it would be for a company like Tesla that's already achieved strong cash flow and strong profitability. It's generating billions and billions in cash flow every quarter. So this type of deal for Tesla wouldn't be as big. It wouldn't be as meaningful because it wouldn't change all that much in the business's trajectory. Whereas for Rivian, it has the potential to change the trajectory. And so I can understand that the stock price is up 9% as of this recording on the day of the announcement. So this is understandable that the stock price would be up by this much after making this kind of an announcement. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.